Hi traders, welcome to my channel. In today's video, I'll be talking about the most important concept in forex trading, not just forex, in any financial market. Okay, the most important thing in the market is liquidity. Okay, liquidity, and that is what keeps any market. A market without liquidity will not operate, will not be functional. People won't be interested in it because price will not move. The reason why price move is in search, or it seeks liquidity. Are you with me? Without liquidity, we cannot transact. Even in the normal traditional market, if I don't have money in my pocket, I can't buy anything. Even though the seller is selling maybe this laptop, for example, a seller is just trying to sell this laptop. If there is no money, which is liquidity, that transaction will not take place. The same thing unfolds in the financial market. Okay, the market moves in search of what? Liquidity. Wherever there is money rested, that is where the market seeks to what? To clear. Because remember, smart money buys cheap and they sell high. They buy at area of discount, they sell at area of what? Premium. And the moment you understand the concept of institutional order flow, then you won't get worried about the market direction. You'll be getting the direction 80% of the time. This is not financial advice anyway. Okay, I'm not your financial advisor. I'm only sharing what I see plays out in the market week in, week out. Now, we are going to explain institutional order flow in the bullish perspective and also in the bearish perspective. Now, let's look at the bullish order flow. When the order flow is bullish, what it means is that price is seeking the upper side what? Liquidity. Price is seeking upper side what? Liquidity. Okay, is interested in taking out the upside what? Liquidity, or some people will call it buy side liquidity, whatever you call it. I prefer using terms that are easy to know, to memorize. Okay, when you say buy side or sell side, most traders get confused. Okay, so instead I'm going to use the word upside, which is the upper liquidity, and downside, which is the lower what? Liquidity. So when price moves, okay, why is price not coming down? Have you asked yourself why is the price not coming down after maybe a break, for example, and price does not come here to take liquidity? It's because whenever the institutional order flow is bullish, it won't concern about taking what? The low side liquidity. Instead, it focuses on taking what? The upside liquidity up to a particular level. There's a level that when price gets to, it then starts to what? To shift in what? In that order flow. Then seek this low side what? Or the downside liquidity. Okay, I will explain it to make sense. Okay. Now, this line that I've drew up here is mostly levels on the higher time frame. It could be a monthly high, it could be previous day high, it could be a weekly high. Are you with me? So until price takes that high, it will not retrace, it will not come down. Okay, once price takes this high, now you can now anticipate what? The low side liquidity or the downside liquidity to be what? To be taken. That means the institutional order flow will switch what? Bearish, seeking a particular what? Level. Okay, until that level is what? Taken. I'm going to show you an example in a recent trade on EURUSD. Okay, where, and in that case, is structure. In that case, if price is seeking this level and you have a structural play here, that structure might not hold that long. Okay, why? Because this high is the target. This is where the institution are aiming to what? To take price to. And once price gets there, then it starts what? Moving away. Now, looking at the sell side, the down bearish order flow. Bearish order flow simply means price seeking what? The low side liquidity. Price seeking low side of liquidity. Okay, seeking low side liquidity. and so on, until a particular level has been taken out. Okay, until a particular level has been taken out. That's when you now consider that, okay, I think this has been done. Now let's what? Look for what? The buy side liquidity. That's when all this buy side liquidity will become what? Target. Okay, all those liquidity become target. But you can predict this in the market. Okay, you have a better chance of winning a trade, because you won't see yourself at the wrong side of the trade. Okay, now to recap before we go into the chart, bullish order flow seek what? The buy side liquidity, okay, or the upside liquidity. The bearish order flow, this one here, seek what? Low side, downside liquidity, or the sell side liquidity, up until what? A particular level, a target. Until that target is met, don't expect market to reverse anytime soon. Until this target is met, don't expect market to what? To reverse anytime soon. Okay, now let's go back to the British pounds. Remember, I've been showing you the analysis of the British pound, and the British pounds is in what is called a bearish institutional order flow. A bearish institutional what? Order flow. And I said that the first target will be this low, this monthly low, to be taken. Why? I will explain. Why? Because the previous month took out this high, and once this was the level that the previous month needed to take, or the market needed to take. Okay, and it was achieved in the previous month. Okay, the month of January, this was achieved. Price went up and then closes below. The moment you see this, you know that, okay, that means our order flow is shifting what? Bearish, to take the previous month low. And that is where price has been heading to. When price was somewhere here at the beginning of the month, I have been calling out this low. Okay, if you check my predict market series, you see me hammering that this low is our target and this is what will be taken. Okay, and I took trades here, and my aim is to get what? This low. Not only that, we can also anticipate what? This low here. Okay, we know that the order flow is what? Bearish. And why this low? We have a kind of what? Equal lows here. Remember our type of liquidity. So price is seeking lower price, okay, on pounds USD. Okay, another way to know your institutional order flow is looking at structure properly. Okay, and whenever a low or a high fails to break structure, okay, a low, let me put back that markings on the monthly, very important, please. That's our target. Yeah, so previous month low, this is a previous month low. Okay, and you can see, look at this down push. Market is seeking this low. If when price was here, I have been what? Bearish on this market. Okay, I've been bearish on this market because I know that the market institutional order flow is what? Is bearish, seeking what? The previous month low. And not only this previous month low, we might also take out this low as well. Okay, these are the two levels. The first level is this, the second level is this. Why this level? This level will be a target, okay, because it fails to break structure. Okay, it fails to break structure, and whenever a level fails to break structure, then you should consider it what? A target, and make sure you trade in that direction, because the order flow is intended in taking that low. I've given you an expo that I only give to my students, but notwithstanding, For the love you've shown on this channel, I'll have to do that. I have to give out quality content. So now this low is a target. Okay, record this day, record this time. Even this low I made mention early this week when we market on Monday, one of my previous video on or probably the last video on predicting the market, I said that this low was our target, and market will definitely take this low because the institutional order flow is bearish. Why is it bearish? It's seeking the downside or the sell side liquidity. Once this low is taken, it will also pick this low. Now, demand and supply traders will see here as what? A drop based rally. A drop based rally, and they start anticipating what buy here. Now, I'm not saying that we won't see buy in here, but when you are buying, look for buy, okay, make sure you get out at the logical levels. Probably if this low goes and breaks structure, okay, breaks this low, then this is your area where you'll be looking to sell to continue the order flow. Okay, this is the area, this is the supply zone here, or the imbalance trade price action. When this week closes below this with a close, then we expect next week to what? To trade up into this level. Then from there you can start hunting for your what? Your seller, okay, your short position in order to take out this low as well. Okay, so that is how to pick out institutional order flow. Now, if we look at the 4 hours, this is where the trade comes in. This is the trade. Okay, we all see this liquidity here. Okay, this liquidity. Okay, after market must have broken structure, the 4 hour, this candle trade up, took out this liquidity, then trade back in. When you see that, you should know that the order flow is what? Is bearish. It's now going in line with the higher time frame, and you can see the drop. Okay, you can see it. Where is the target? This low. Now, even though we have a break of structure here, as I said, on the 4 hour, the reaction here, and you start buying, most people will be buying here, be looking to buy. Yeah, we might see a reaction up. Okay, I'm not saying you cannot hunt for buy here, but what I'm saying is that this low is the target. So when you're buying here, you have to be careful. I'd rather be a seller. I'll wait for price probably to come to this hidden base or this level before I continuously want to push price down up to this level, because this is where price is heading to. Okay, that is one example on the pounds USD. Second example will be on Euro USD. Okay, if you look at Euro USD, we have the same play. Let's go to the monthly. As I said, you only determine the order flow from the higher time frame. What I'm showing you here does not apply on the lower time frame unless it's in conformity with the higher time frame. Okay, so what can you see here? When this month started, okay, price traded what? Up here. I know why it's moving up here, but I will reserve that. But let's pay attention. When price took out the previous month high, then trade backs below, all you need to do is start looking for what? Your bearish QM. Okay, look for your bearish QM either in the 4 hour, 1 hour, to move the price lower, because since this high has been taken, okay, we'll be targeting this low. So our order flow is what? Is bearish up from this point. Okay, when market opened here, the order flow was what? Bullish. Reason is this low took out 2 months low. Okay, took out 2 months low. Okay, and then traded into a particular zone, hidden base there. So if you expect that, okay, and it closes back within those levels. So now when market opens for the next month, your target should be this monthly high. Once that monthly high is taken, the order flow will shift. The order flow will shift. Now our target is the previous month what? Low. Previous month low. And also, why are we looking for a bearish order flow, we can see that we have final imbalance to be filled here. So price, after taking this low, will be taken into this what order block here. Price will drop down to this order block before we can now look for what? A bullish institutional order flow. Liquidity is the game. Structure is the formation. Okay, liquidity and structure. The moment you understand liquidity and structure, you have no problem. Now, the moment you notice this, these are red line above here. Look at the weekly. Now, what is the weekly showing you? Before now, you can see here that the weekly had a break of structure. But what happened? Because we are coming from a higher time frame perspective, and the higher time frame perspective says that this weekly high, this high here, should be taken. Okay, what happened to this setup? Most people will believe they will put 100% trust in this formation. But if you don't understand order flow, you are going to miss it. Okay, all you need to do is to wait for what? This to close, to take the liquidity and then trade back in. The moment this is done, your first target will be that week low. The next one is what? This previous week low. Then before we look at this, before price move down back into this IPA candle. So I'm expecting price to trade lower, take this low into this level. Then from here, the order flow will switch what? Bullish. Okay. If you look at the monthly, as I said, when price crosses this, look for your bearish QM. And we have that bearish QM, I think in the 1 hour time frame. Yes, that confirms your what? When price breaks structure in the 4 hour, let's go. When price breaks structure, look at that high and broke structure. Okay, it broke structure, traced back into this. This was the only imbalance. Above up here, there are no form of imbalances. So this was the only imbalance. So when price breaks structure here, then trace back into this imbalance, this is where you should be looking for your what? Your selling opportunity. Then when you sell, you take profit logical place, or you hold your trade. Now, most people find it difficult to hold trade. It's because they don't know the direction of the market, the order flow. If you get the order flow right, okay, using this technique I'm teaching you, you have more confidence to hold that trade. Even as you take some partials along the way, you can keep your trade open, knowing the fact that this low will be taken. Okay, now what are we saying here? We have here a what? A bullish what? QM. Now hope or rubber, am I expected to buy from, let's say, this other block? Can I buy from this other block? The answer is yes. Yes, I can buy. Okay, but will that price take it up to this point? I am not sure. Okay, you can hunt for buy in here to take the price up. Okay, up into your level of what? Level of supply, hidden base. If that does not hold, here we hold. Okay, so the main idea in this video is to understand the market direction using institutional order flow. A lot of people have done videos on order flow, but as I said, my intention is to simplify the trading strategy. It doesn't need to be complicated. As long as trading is not complicated for you to start by clicking buy and sell, your strategy also should not be complicated. Make it easy, simple. Okay, so order flow, you are seeking lower what? Liquidity. This low will be taken. Record this time, put it down. Okay, that low what will be taken, because that is the price the market tries to seek to take out. Once this low is taken, then we can expect further push into this is it order block? Which of the other block? Monthly. Yeah, this is the monthly order block. Yes, so that is that. and that's what I wanted to share with you guys, and I hope you had a proper understanding of this. Another one is, okay, let me treat one more order flow. Okay, let's look at the pounds, I mean NZD pounds. In the NZD pounds, I said that from analysis, all these are recorded. Okay, check my last video, you will see the analysis there, and you can see here I wrote here target, that the order flow is what? Bullish. Okay, up until this level is taken. Okay, though price went up and started going down. Okay, it is expected, but our goal is to take out this high before I start looking for what? Short. In the long term, well, we should be looking for short position into this area. Okay, once this liquidity is taken, but this liquidity can be left pending. Okay, up until this high is taken. That's my target. Okay, so when you go to the monthly, you can see that price reacted of this this order block from this bearish QM, and probably you're expecting lower pricing, but I am expecting this high to be taken first. Okay, why? Because the monthly time frame indicates that, and monthly supersedes what? Weekly. Well, will I be right? Will I be wrong? It depends. Remember, I said most of the time, as I said, 80% of the time you will be right. You will be right. I'm saying this out of experience. I've done a lot of back tests, and you can see here, that here, this low took out all of this liquidity. So, and then forming what is called bullish QM. Okay, so from there you can start looking for what? Your buy in here, your stop loss below, your target is this high here. So I'm expecting this price to move from here, how many pips up? 193 pips to that point. So you can start hunting for what? For buy. Start hunting for buy in here. That is my own analysis. You might see something different, fine, I respect that. If I take a loss here, fine, is normal. But the way I train myself to understand order flow is to look at what the higher time frame is doing. Where is the liquidity going to? Okay, where is it coming from? Once it gets there, what am I expecting the market to do? The reaction, and that will help you a lot. You will know when to enter a trade, when to buy, when to sell. You don't trade anyhow. Okay, so that is that on the order flow. If you have any question, put it in the comment section, and I will do my best to answer you. The next video is on how to get sniper entry. Okay, you see, when price gets back into your point of interest, how do you enter that trade? I have different entry techniques. Okay, and the one I've been sharing is you just look for a bullish QM or bearish QM in the lower time frame within a point of interest, and then you pull your trigger. But there are other ways where you can enter the market. Okay, so this video here you are looking at is about how to get a sniper entry. I'll see you in that video.